Your approach to branching, has that changed a little bit lately, or I think I've seen something about a new approach that you're taking?
Yeah, Bill, back in 2012, we started working on how we were going to set up our branches for future success. And our value proposition is really about deep relationships with our members and not necessarily low price. And so we knew we had to create an environment where our people could have deep consultative conversations with our members, and also that reflected our connection to the community and our investment back in it.
So how have your branches changed physically as a result of this new focus?
Yeah, great question. So what we've done is, as we've added new branches, we've deployed what we call our branch 2.0 format, or 2.0. You can call it what you want to call it. We just call it successful. And those branches don't have a teller line. They do have a teller pod, so there's usually a 2-station teller pod. There's also an ATM machine, and then there's consultative offices, which have a sliding door and no desk to form a barrier between the member and the financial solutions guide. Really, they sit more beside them, and they have a rolling table that they can use to really have a great, deep conversation with them. And so if people come in and they want to make a transaction, and they want to transfer and really solve a problem or talk about a solution, then we can easily transfer them, and just because these guides are universal agents, they can transfer from that teller pod, from that transaction, into a really good conversation in the office. And what we've seen as a result is that members trust us to really deliver more solutions to them in that environment, and we have higher products per household in those environments, and our loan results in those 2.0 environments have really shot through the roof.
What types of loans and other products and services are members more likely to get through you in these new branches?
You know, we are a strong mortgage lender, and we are the #1 mortgage lender in our Boulder County market, which is about 380,000 people. We are on the charts in the top 10 in the Denver metro, and also now moving into Larimer County, we are number 2 or 3 in the purchase money market there. And so a lot of our conversations in the branches are either retail products, checking accounts. We have a very high checking account penetration, but they're also around mortgage. We also have a wealth manager in those locations. And so those branches really form a team and help the member find the right solution for them.
What have the results been so far in terms of your deposits and loans and product and service use?
Yeah, Bill, thanks for that question. In our 2.0 locations, they've exceeded our expectations and our pro formas for deposit growth. They're also attracting higher percentage of members in the credit-driven demographic, which is a term which, is a Radin term, but depending upon which, what kind of marketing strategy you use, it's really those types of members that are in the borrowing stage of their life. We've also seen, when we've implemented the same format in existing branches, we've seen loan production results go up as much as 36%. And that was in a very large branch. It's almost $500 million in deposits. So we really think that the model's validated.
How might your model evolve in the future?
We've made that branch very flexible. There is we call it the Elevations Bar. And it's like a Genius Bar. It's not like a beer drinking bar, but it's kind of like a Genius Bar where we can have conversations with members about technology. We see that becoming more prominent in the future when people come in and they've got a problem with online banking, mobile banking. We really want our staff, and we've got a great staff that really deploys this model in these branches, having conversations with people about solving mobile banking problems there. Those teller pods are also very flexible, and the way we use technology, we have ATMs or what's called an in-lobby teller in those branches. And so we'll be able to move or take some of those elements in or enhance some of those elements as it goes along, because it does have a very open floor plan and a big waiting area, which speaks to our commitment to the community with signs like number of small businesses served. The other way it's flexible, Bill, is that those offices are all universal. And so while the mortgage business today is very strong, tomorrow we might need 2 wealth managers instead of 2 mortgage loan officers and 1 wealth manager. So we'll be able to change the occupants of those offices because they are universal.
Anything else you'd like to add about your branches or your branching approach?
I think that it's important to note that it took us nearly 2 years of study and really collaborating with other credit unions and also reading industry materials on what we were going to deploy. And I think as credit unions look to build the branch of the future, because 80% of new products still get signed up, sold in a branch. Members really want to have that consultative conversation, that those credit unions really spend some thoughtful time and go out and collaborate and come see us and go see others that have new branch models and really determine which elements fit right for them and their membership, and then make it their own. That's what we did. We aligned it with our brand, which is about localism and it's about community. And our hope is that other credit unions can experience the same success that we have.